Good evening, everybody. It is, I have a clock over here somewhere, 10:52 on Saturday night. That makes tonight the 1st of September. And welcome to this week's edition of my top-down review. Doing this on Saturday night, so even though it says 9/2, by the time I post it, I'm sure it'll be Sunday. I entitled today, Is a September Solstice on the Horizon? And what a solstice is to me is a change in the season. Clearly, we're going from summer to fall. Summer's finally over, which means maybe the volume will increase. It may also mean from a bull to a bear. I don't think so. But maybe it means from a market that's moving strongly up to one that goes sideways or pulls back, as September really is one of the weaker months in the year. Let's take a look at what I see in the market and see if we can get some ideas for this coming week. For those who haven't been here before, my name is Jeff Scott, and I am the HGSI doc at gmail.com. And this is for educational purposes only. Anything I recommend is spirit of education and not investment advice. I'm a doctor, not a broker. I'm independent. That means nobody pays me what to say. No one gives me free programs, although I'm open to take anything people want to give me. Joe. And I've paid for everything that I demonstrate. Trading involves risk, and you alone are solely responsible for any investment decisions that you make. I always like to recognize where I learn things from. You'll recognize O'Neill. I started as a can slim, made better by Morales and Catcher, taken to the computer, and I think improved by Ian Woodward. Ron Brown started in the audience with me and became Ian Woodward's partner for Woodward and Brown Investments. John Person, also a top-down guy, not a can slim person, obviously. Has an interesting way of looking at the markets, has some great trading tools, introduced us to the PPS signals, high closed dojis, low closed dojis, how he uses pivots, how he uses on-balance volume. A big fan of his, and I've learned a lot from him. What he really helped me do is to take the name of the stock that I learned on the left and help me better understand when to buy it, when to sell it, how many shares to buy, etc. Then a couple of other things circling Van Tharp, the king of money management. George Lee, my buddy from Western Canada. Allegedly, we are doing a live meeting. I guess I have two I can sort of mention. I hope to get finalization and links for you soon. November 16th, 17th, and 18th in Orange County. That will be a small meeting, probably no more than 12 attendees, plus George and I, and maybe guest speakers. And that will be at Greg Larson's home where we did it last time. Actually worked out quite well. And then I'm going to have to figure out my calendar, to be honest. John Person has a meeting. I believe he's got his on the 29th, 30th, and 1st of November. 29th, 30th November, and December 1st. I may hold a pre-meeting on the 28th, and then I'll be at John's on the after the 29th and all day on the 30th. But probably will not be able to hold a meeting on the 1st, as I've got to get to the American Society of Hematology meetings. So a number of meetings coming up. And Sagar, I call him Sagar, that calls him Cigar. He's got a great product and superior profit. He's also a top-down guy. I think he actually created some tools to help me out when I had some questions. But he's got some great indicators. He's on our Discord site, and I highly recommend his tools as an add-on to the things that I use regularly. I use a lot of programs. I need TradeStation, Thinkorswim, HGSI, and EdgeRater. The rest of it just helps me. Those are the things I need if I'm on a desert isle. From a website perspective, again, I have no financial relationship with HGSI, but they offer a free 30-day trial here, no credit card asked, and they have, under investing strategies, you'll find a large number of movies, some by me, and a lot by Ron Brown and others. Stock patterns are cyclical, and I've said the same thing over and over the last several months. It's like we truncated the top of this, and every time it looks like we're breaking out, we don't. And every time it looks like we're falling over, we don't. And that we've really been in a upward trending Darvas Fox trying to get back to January highs. But we haven't really broken much away from that pattern. Are we breaking out now, or are we about to go back in? I don't know. This has been a challenging market for many. It's easy to trade stage 2 trending up or stage 4 trending down. This has been a sideways market, although the indices go higher and higher and higher. They don't go in a straight line, and we'll show you some pictures of that in a few minutes. Last week has been very strong, especially for the NASDAQ. So you've got to play differently based upon where you think the market is, which means you should have raised some cash here, maybe have smaller positions, sold some premium money. A lot of different ways of managing the market here. I have had a bullish stance, as I've said, the last couple of weeks. Friday sector review, just looking from 30,000 feet. What do I see here? I see a lot of mixture. Look at materials weak, energy extremely weak. If I find banks somewhere in here, financials were weak. Where's the strength of the market? Technology has been strong. Healthcare, although it was mixed on Friday, has been very strong. And obviously, anybody that's watching the markets or CNBC knows that Amazon and Apple have been extremely strong. Let's take a look and Thinkorswim at some of the major markets, make a few comments about where I think we are and maybe we're going. First thing, just stepping back, E-minis, NQs, YMs, and the IWMs. They stopped having RUT. Sometimes I can use RTY for Russell futures. What I want to point out is these are the highs of the year. This is a 1 year worth of a chart. And we hit the highs of the year on everything over the last week, including the S&P. Now, we did not, I don't believe, on the Dow. So let me just go back and double check that. And as you can see on the Dow, let me make it extended as much as I can. We have not gotten back to that January high. We have, however, on the S&P and the NASDAQ and the IWM, the Russell have been hitting highs for the last several months. Now let's open up and take a look at some bigger charts. So here is an E-mini, and I would like to make it a full year, so let's see if I can't do that. And what do I see? We're at the top of its channel. And as you can see, this is what I mean by every time I think we're breaking out higher, we pull back. Now, is it different this time, or are we up at the top and are we going to pull back here? I'm betting we come back in, especially since this is September, but we go higher before the end of the year. We look at the NASDAQ futures, and again, let's give me a full year here. You can see that we hit all-time high on Thursday. On Friday, we opened down but closed right off the highs, prior highs. Again, at the top of its range, maybe even breaking out. We'll probably redraw that trend line now. And we have certainly at the top of the trend line. NASDAQ last week was the strongest of the indexes. Here is the YM, and you can see a similar pattern. Now, the Dow futures, as I mentioned, have not taken back to their highs from earlier in the year, but have been marching higher. But again, it's not as steady. Like, as I once mentioned on this call, this market, September, October, November, December, January, throw darts, your market went up. Steady uptrend day after day. That's not what we've been dealing with, yet we've come back to almost get back to those highs on more of this channeling market. The Russell, let's get a full year. Closing high set on Friday, new high set on Friday. And again, breaking out, leading the markets higher. Is it different this time? Now, this one actually went sideways before it broke out here, so maybe this leads us higher. The VIX failed to get above its 200-day, and the dollar, dollar's been in an uptrend since April. It definitely pulled back from a high here of 96,984 on August 17th, bounced at the end of the week. That's probably potentially a big story there. So I think the falling dollar would be supportive to the markets. Now that's looking at the daily. If you want to flatten things out, make things look a lot smoother, you can look at the weekly. And just standing back here, without going into big charts, you can see the huge uptrend on the E-minis, the NASDAQs, the Dow, great weekly buy signal here going up, the Russell, and the flatness in the YM. And although we've had a move up, as I said, over several months in the dollar, it is in a longer-term downtrend. And it'll be interesting to see, can it get back above this 200 weekly moving average, which has been a barrier to going higher. So I look at the markets, obviously they're super strong, but my gut tells me that they're in a channeling mode and they're probably going to pull back in the next week or so. Daily, weekly, monthly charts. Again, here's a monthly chart. It just shows you the strength of the markets here. But as we look at the last couple of days, it certainly looks like they're stalling out on the daily charts. And this is the E-minis, the NASDAQs, the Russells, NYSE, and the Dow. So would it surprise me for these markets to break out and go higher? No. Do I think they're going to pause and take a break, as the title implied? I do. Rates, they actually, so you can't see them real well. They actually rose a little bit this week. Not much of a difference, as we anticipate a Fed hike is coming. The yield curve, which is this blue line, shows you the 2 versus 10 delta is getting closer to baseline or zero. Now, I've also pointed out that even with a tightening, even with a contracting 210 difference and a flattening yield curve, the market, and this is the S&P in pink, really doesn't turn over until the they start tightening after the recovery, and then it's the rising spread of the yield is when we start to see the S&P actually fall. So I'm not expecting the market to roll over just because they're flattening. It's when they start to recover that's the problem. AD lines are in white, S&P in yellow, both the small stocks on the left, big stocks on the right, AD lines and markets both going to higher highs. Here's looking at the AD line, the NYSE, and then this hodgepodge here all going to up are the diamonds, Qs, spiders, and IWN, and transports. And the only thing that turned down was TLT, the bonds. Breadth, stocks with 200 did not change much over the week. Stocks above the 40 dropped a little bit, still strong, not overbought. What did drop a little bit was the 3-month new high, new low that gets us back into a more neutral range. And this is only meaningful to me at extremes, and right now it's certainly not an extreme. The daily McClellan, you got clear divergences on the oscillator. We're trying to get to new highs here, got to new highs, yet we're coming down on the daily oscillator. Plus, will we reject the zero line or go through it? On the weekly, same thing, new high, but really not new highs on the oscillator or summation index. So I see a lot to be concerned about from the perspective of divergences there. Take the S&P 1500, put Bollinger Bands on them. What percent of the stocks are above the midline of the Bollinger Band? 2/3. That's bullish. Yet very few stocks are above their Bollinger Band. So I don't see a signal here, although it's a bullish looking market. There's not been a Hindenburg on the NASDAQ since August 14th, and there has not been one on the NYSE to June 21st, so no signal there. Market tone increasingly bullish here. Not perfect. This is a very bullish market here where it's green across all the major indices. And I'm looking at the percent B times bandwidth, forever known as the Woody indicator. So that's more bullish than last week. Still could get more bullish. And we see sector strength improving, although still a lot of mixed sectors. Nothing negative. Now, the Canaries, 2 weeks ago, I said it looked like they would reverse, and they did. Now, they broke up above the 50, and now we'll see whether they pause to refresh or do they move higher. I think they stall out here. I think that certainly is a possibility. Now, let me introduce you to my new friend. This is a Scott Summer Solstice Index. Now, historically, Ian would go to the market when it was at highs and put together a list of the best performing stocks and take the assumption that when these stocks start to roll over, then the market is done. And then to use this as an early warning sign because the leaders may turn over first. So you take the current leaders in the market, lower left to upper rights, no more than 2 stocks per industry group. By definition, most of these stocks are extended because they're leaders. This is not a buying list, but rather a list of the best stocks in the market as we approach the top. And Ian taught us this list may give us an early warning before a major market correction. So there's 26 stocks in the list. The only one that doesn't have good fundamentals is Tilray, TLRY. It's one of the new marijuana stocks. But everything else has a good balance of fundamentals and a great stock pattern. In fact, this is the index, and look how from July, this index has just gone up about 40% in 6 weeks. And you could see on the weekly that this index made up of these leaders is like a rocket ship. And remember what happens to rockets. They go up like rockets and they come down like rocks. So we're going to watch that now on a weekly basis, try to determine whether this index can give us better information about when a market's going higher or rolling over. Know your news and earnings dates. It's Monday's obviously a holiday. There's a manufacturing index on Tuesday, some trade on Wednesday, lots of Fed heads speaking this week. Petroleum numbers on Thursday as usual, and then the monthly unemployment report, which will be a big mover on Friday. So just because you got the unemployment, it's a big news week. I'm fully expecting that next week when there's a Fed meeting that there's going to be a rate hike, and you'll probably hear some Fed members talking about that, maybe talking down December until they get more information. Earnings, you think we were done, but there's some biggies here. Restoration Hardware has had some nice runs after earnings of late. Workaday, Coupa has been a leader this year on Tuesday. On Wednesday, Duluth Trading, HD Supply, DocuSign, and IPO, that's been a great mover. On Thursday, Land's End, Dell Technologies, Barnes & Nobles. Thursday afternoon, Broadcom, Five Below, OKTA, Okta, I don't know what they call it, but that's been a nice looking chart. So there's a number of things. As I say in the lower right-hand corner, it's judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I typically look at the stocks having earnings during the week and look at their seasonality and to see if there's any stories. I haven't done it yet this weekend. But last week we talked about Alta. I actually did put a video on the Discord site to talk about the rehash of my Alta trade. But this was a trade that I talked about last Sunday. I said that I would take a Jeffrey Scott synthetic, chicken shit synthetic. In this case, the stock was trading around 242, I believe. And I bought a 240 call. I paid $13.80. I sold a 240 put. So that gave me a synthetic long for a price of $7, $6.90. Then I bought a put for $4 to protect me to the downside. Actually, don't use that column. I paid $13.23 for the call. I got paid $8.11 for the put. So I paid $5.12 for that synthetic. I then bought a put to protect me. Now that gets me up to $10, $11, almost $11 on the trade. And then I got paid $2.31 to sell a $270 call. So all in, let's try and actually stop and do the math for real. All right, so I paid $8.40 of a contract per contract here. Now Alta actually opened down, and I thought I was going to be finish out of the money. In fact, potentially have a maximum loss, which would have been an additional $7.50 on this trade here, the put spread. Then the calls would have gone out of the money. It turned around, and by the time the market opened, it was up a lot. This is when I started selling my shares, and I just want to show you the power of my chicken shit synthetic. So for $8.40 a share times 3,000, I was able to control for $25,000. I controlled 3,000 shares. Now at $240 a share, I could have had 100 shares. Yep, it would have been 100 shares that I could have controlled for the same price. Now, if the stock moved up 10 points on 100 shares, I would have made $1,000. But because I was doing options controlling 3,000 shares, when the stock moved up $21, the value of my options moved up $60,000. Now, the fact that I had a lot of premium in their time value meant I only was up $40,000 about an hour into the market, and I took my profits. But to me, a 1 day, 2 day trade where I paid $25,200, I ended up profiting $40,725. That wasn't a bad trade. And so this is the today's P&L, and then the next column over is the overall P&L. I lost a little bit the day before. So big move, big profitability, more than 100% on my return investment, frankly, about 180% in a 2-day trade. Gotta like that trade. Stock moved 8.62%. My option spread moved almost 200%. That's why I like options, and I promise to teach more of how I trade them and why I trade them at my meetings. Market thoughts, NASDAQ let the market led. It shouldn't be a lead. Hold on a second. I don't know, is it led the market on a record extending week? Although the market limped nearly unchanged into the 3-day weekend on Friday. Trade talks highs, Mexico lows, China continue the news, while Canada talks continue past the deadline. Fortunately, earnings season is finally drawing to a close as we enter one of the weaker periods for the market. Will we see a pause or perhaps a pullback as people come home from a 3-day break? It may be September to remember as news will continue to dominate from China and trade, Trump and his legal issues, Mueller and Russia as we head towards a contentious midterm election. Plus, do not forget a Fed meeting and hike this month. I continue to believe we'll end the year higher, but it may be time for a September pullback or a pause. Let's take a look at a top-down review. When I looked the last time, I was having some problems with TradeStation, so probably will not go and look at it. My arrows were not coming. They still are not. I think the App Store must be down tonight. So let's go look in HGSI and see what we can find. Now, I always like to go into the market analyst groups. You have to find where yours are and hit the warehouse view, and they should pop open here. And we want to go into Major Markets Plus, do a top-down view. And I must have something on here. Let's see, why is that? All right, let me try to do that again. There they are. And take a look at what's moving in this marketplace. So the first thing is gold, silver, utilities, bonds, volatility are all at the bottom. That's great if you're a shareholder, stockholder. Small caps, NASDAQ, mid cap, Russell, biotech, semis on top, and then in the middle, the S&P. So really, this is a perfect market for my type of trading. In fact, if I go, and let's see if I can find it here. Thought I had it open. Yes, I do. Look at the group performance. Almost all the groups were positive this week. What I wanted to just show you that the S&P on the week was up 0.93. Now, that's a pretty big move for the S&P in a single week, considering the price. However, growth stocks were up much more. This is the IBD 50, which is up 2.73. My stocks were up 2.9. My buy list that I put together, the filtered buys, was up 2.28. 17 out of 20 were up. So a very strong week for our type of trading. Let's take a look at the major indexes. S&P 500 we'll start with. We already looked at this with Thinkorswim, so I'll just point out some of the things that I see in HGSI very quickly. Well, not as quickly as I would like, apparently. All right, here we go. So here's, get into the view I want, which is this. So a couple things. You can see we're at the top of its trend line. Bongos are green, no Hindis, and we're not at the high jump. It just looks like the same ways I looked at each of these points where you pull back a little bit before the next run up, and that's what I expect to happen here. I bought some contra ETFs, but I'm still more geared towards the long side. But I did buy some protection going into this coming week. Dow Jones, same story. NASDAQ will look a little bit better as it's right off the highs here. Has not turned down. And one of the strongest in the market has been the Russell, closing at an all-time high there. Now, dollar, as we talked about, that's not what I want. I want UPP. Or is it UUP? Doesn't matter. UUP. The dollar pulled back to the 50-day moving average and bounced. So that's bullish for you dollar folks. And it certainly looks like the dollar's strong. But let's tighten this up a little bit and let's see how strong it is. Or not tighten this. So dollar was in a huge downtrend throughout the 17th to February of 18. Had a big retracement, has fallen since the middle of August. So is this something meaningful or not? Time will tell. And you can see, unlike the dollar futures, the UUP has made the 200. And if I was just looking at this, I'd expect it to bounce. So we'll see what the dollar does. Now, the dollar matters, especially if you like gold or silver, because they'll go the opposite way. And you can see with the dollar going up, gold continues. That silver drop, and gold will look the same. And the other thing that fails to move up any time of recently is the VIX, which is down in sort of where it's been hanging out over the last several months and is below its major moving averages. So that's the market take. If I look at industry groups, you see I have 174. If I look at two-day momentum up, I have 44 to the upside and only 2 or 3 of them are to the downside, integrated utilities and refiners. That's interesting. Refiners have been hot. At some point, they'll be going through that conversion from summer to winter, and maybe that's what's pulling these down. So let's just take a look at what some of the leaders here are. Biotech changed index group. So this is one that I don't know anything about. So we're going to go ahead and go to the website. So this is a small stock, and the last time it had volume come in and it spiked, it ran up to 50, and it came back down to its baseline of 6. It had a huge move on Friday. This is too much data, so let's make this smaller. Perfect. So you could see it's been flatlined for some time, had a big kahuna, OBV turned up, doesn't make any money. So I always would like to go to more info from Web. FinViz, let's see what's going on here. Must have had something good come out at an investment conference, or maybe somebody realized that they were a real company. I may take a flyer on this. I like cheap biotechs because sometimes they do what AFAMED did and they get bought or they get an investment. Something's going on. The volume was 4 million shares. The average volume was less than 1 million. So at least 4-to-1 volume this week. So it's something that I'm going to be taking a look at this week. CRISPR announced a new in-human trial, and it had a big move up on Friday as well. Keep in mind that both these stocks are early developmental stocks. One doesn't expect them to have much revenue or earnings for quite some time, and their stock prices will be 100% driven by news. Now, interestingly, the index is right up there, which isn't great. It just tells you that from a leader stock perspective, there weren't a whole lot. Geron, I've been watching the last couple of weeks, another early stage company that I like its pattern. Maybe we'll take a position in that. And then let's see, a couple others I liked. Celgene, I told people about it when it was down here at about 80. It's moved up to 95. It's kind of fairly valued right now. It's got some patent issues, so we'll see if it can move, but it had a good week as well. Anilin on news had a big move here. And that's the thing about biotech. You've got to know the news. Viking Therapeutics, another nice looking chart sideways, breaking out and running, again, preclinical, all news driven. Then PCRX, which maybe it's not a biotech, maybe it will be under specialty pharmacy. Now, one that I thought was interesting this week, that's not it. Let's see if I can find it. There was a investment in a stock I think it's also Specialty Pharma by Genentech. Let's see if I can find it later. Affamid, I think is what it's called. So that's biotech. Another one on the list of strong specialty apparel. These have been a mixed bag. Those that have been up on earnings have done very well. And then we'll look at American Eagle, one that did not do well. Maybe it's time to get back in. So Lululemon had great earnings, really great earnings. A Bible gap up, but you notice it closed near the open at the bottom of its pattern. Beautiful day with a global breakout, a Bible gap up, and a kahuna, and on great volume. I just get a little nervous when I see this because of 14 shares. Because even though it was a Bible gap up, I don't like how it finished. Great earnings per share growth coming in. Great stock. I'd rather buy it closer to 140. Don't know utilities from Adam. Good earnings per share growth coming in. Earnings are out. Also had a Bible gap up on earnings. This is what you want to see. It closed near the top of the day and then a further move up the next day. That looks interesting. TJ Maxx has been a really nice leader. Its earnings are out. It gapped up and continues to go higher. Get the max for the minimum at TJ Maxx, right? ESW, another gap up on earnings. Hasn't broken the pattern yet. Don't really like the 2 quarters out earnings per share. American Eagle Outfitters did not. Their earnings were fine. Their guidance was interpreted originally as being negative. Sold off hard from 30 down to 24. Bounced back up to 26 by the end of the day Friday. You know, if you're a long-term holder, they've got good fundamentals and want to be a 2% dividend, this might be a good place to start nibbling on the 50 with the kahuna. Express was another one that made my interest sort of breaking out here to, it's kind of where it's got to get above that 11.4, 11.5 level, but breaking out to recent highs. Great earnings per share growth coming in. Boot Barn was another. I don't like the name as much as I like the chart pattern. What a great uptrend for near its highs. Probably would have bought closer to the 50-day moving average. But lots of things look interesting in the apparel group. Semiconductors, like to see them as leaders. IDTI had some notice of a buyout offer, I think from insiders, and it spiked a little bit on Friday. Hard to play these unless you know what's going on. I probably wouldn't chase it. NVIDIA, big leader last year at the high of its range, trying to break higher. Still got good earnings per share growth. AMD, another one that's had a great run, give it a little flag. Semtech broke out this week. Now, I was interested in AVGO. I think this is one that is starting to make acquisitions again. It's really slowed down on the NXP semiconductor acquisition, but its earnings are out this week, and I liked it. This is a high close doji on the daily. If I remember correctly, there was a high close doji on the weekly too. Let's see. And it's a high close doji on the weekly. It certainly looks like it's done going down. The problem with Broadcom or AVGO is it's got earnings this week, so that's not anything I want to play before earnings come out. Back. Specialty Pharma. Huh. All right. Insys, not one of my favorites, but I think they've got some play in the cannabis world. Pulled back some on Friday, but had a big move up Thursday. Acorn, this is one that Fresenius has offered to buy it, but then they found accounting issues. Zoetis, I believe, is a veterinary medicine, like a steady play up here. Don't really see a compelling buy story at this time. Endo's had a great run, continues to go higher. I just give up on this one. I don't like its earnings per share growth, but they've really had a nice move. Flagpole, pennant, and breakout. And I guess you could say 12.5 to 18.6 broke out. Could run up to 22. Now, the one I like the most here is probably, I got Horizon Pharmaceuticals, I like a lot. flagpole, pennant, breakout on Friday, get above this PSA air dot, pocket pivot in a kahuna, everything's green. Awesome earnings per share growth in this turnaround play. I like this one a lot. And Pacira Pharmaceuticals almost looks like the same pattern, doesn't it? Run up, pull back, ready to break out again, pocket pivot, kahuna, mobile breakout from a squeeze. Doesn't make any money. So I like that one. So there's a couple there. So there are stocks out there to buy. So far, they're healthcare and semiconductors and apparel. Medical equipment, I mean, this has got to be my pick of my lifetime. If you go back to somewhere on April 8th, I think was the Sunday, the stock was about $6, if that, and I talked about buying it on my webinar. I wonder how many of you had even heard of it. I never heard of it before. It just started showing up on my screens, and then should have bought it back here at the end of March when it was in its fours. But here we are on April 10th, and I presented it at a meeting on April 9th. So this is April 6th. Didn't do much on Monday and broke out on Tuesday. And as I said, I got into the stock about 6 at some point on Tuesday. It's run from 6 to 46 in less than 5 months. I don't think I've ever had a stock go up, especially one that I put out a webinar and said to buy it in that short period of time. So that's a great leader. I'm not sure I'd be adding to it right here, although it keeps going higher. Made my year besides Amazon. Intuitive Surgical, another great lower left, upper right leader. I'd rather buy it closer to the 50 when it comes down to visit. You see the index of equipment is high. Here's Inogen and Oxygen play. Just a lot of nice looking stocks in this group. But we need to buy stocks that are in buy points now, not stocks that are extended. E-commerce discretionary Amazonian time. A lot of people saying Amazon's extended and probably is going to pull back. It kind of looks a lot like our indices in that every time it runs up, it pulls back. Well, it's run up, so I wouldn't be surprised to see a bit of a pullback. Even though it's got a multiple of 182 times, look at its earnings per share growth rate. Its growth rate is beyond its multiple. And this stock's going higher. They've now got targets on the street of over 2,500. That caused a lot of the run up this week. It's been up, let's say, 6 or 8% in the last month and for August. For a stock that's $2,000, that's a huge move. I play this with both shares that I'm long from 450 as well as I do a lot of call spreads because there's just so much premium. What that means is I'm long, I'm buying deep in the money calls, which have nominal time value, and selling in the money or just out of the money calls, which are expensive with lots of time premium, and just putting that time premium in the bank over and over and over again. In fact, I'll probably do a comparison of buying and holding Amazon in one account versus just trading the options in another, and you might be surprised which account has actually made more money. Amazon, obviously a leader. Is it going to go higher? Yes. Is it going to pause first? Sure. It's done it every other time. Stitch Fix breaking out to new highs. Would have been nice to have bought it back here on these pocket pivots. Makes a little bit of money. It's an IPO. It looks like it's going higher. Wayfair, they all sold off here over the summer when they decided to tax them. And it didn't really matter because they just kept on going. And not only did Wayfair keep on going, another one that I own, Etsy, the same thing. Here's one I'm interested in, CHGG, Chegg. Not because of its fundamentals, but what a great lower left, upper right story. Like this one a lot. So I can continue down the list. I'll go through the top 10, see if I find anything else that looks interesting. Other retail, that means Ulta. It's worth looking at this for a couple of reasons. Seasonality. This was the Ulta, and last week we were looking at it on this bar right here. And I basically, let's go again, Friday, Thursday, Wednesday, Tuesday, Monday. So I looked at it this bar here. And I said in the short term, it's in a new uptrend, and that I expected it to struggle for a couple of days, the green line being the 5-week seasonality, yellow, the 10-week, 10-year and 5-year rather. And then notice how seasonality was strong down here, 9 out of 10 years, starting on August 27th, up average of 15%. I thought it was a safe move to take. I took the trade. You saw the results before. The other thing that's interesting is, even if you're not a seasonality person, take a look at what the stock did this week. Okay, here's last Friday. I said I'd buy it closer to earnings. Here's Monday. Here's Tuesday. Here's Wednesday. Here's Thursday during the day. Now, if you were watching this, you had a pocket pivot come in. This is a high close doji off of that doji. Out of a squeeze, a stock that is breaking above the 50. This was a buy, even without seasonality. And then this is what happened. Now, I didn't have to buy it before earnings. I could have waited and got in at the open, or in the after hours or pre-hours, I could have gotten in down here. But this one had a great move, a bobble gap up, finished in the upper half, and I still have a few shares left. I took most of my profits. I don't know this guy at all, Carvana, but what a pattern. Doesn't make money yet. You can see its revenues growing quickly, which is a nice thing to see. I'd rather buy it closer to the 50. It's certainly extended, but this is one to put on your watch list. And what I do with some of these expensive stocks on my watch list, when we get a dump day where the market is down 500 points at the open, those days they end up closing break even or all. Sometimes these big leaders, you can buy at a discount. Funko reminds me of a game that I played when I was a kid. No idea what they do. Pop culture, consumer products. Makes money. Revenue, not that exciting, but this is probably the Christmas quarter. Has earnings growth. Beautiful chart pattern. IPO, that's another one to put on your list of watching. Back. Infrastructure software. What can you say when Microsoft has a pattern like this? I almost put it in my leaders list. I just couldn't. Microsoft, it's an old stock, but what a nice lower left, upper right. Splunk, nice move here on earnings. Expensive, if you ask me. Red Hat, maybe. I see these 3 kahunas in the last 5 days, a bunch of pocket pivots. Something's going on here, but I don't like the earnings per share growth or the multiple. VMware, it's anything here that I liked. Fortinet's a big leader. Wish I owned some of that. Probably too late to buy it. It made my big list. Back. Medical devices. I like a couple of these. Let's just look at these very quickly. Again, like everything else in this market, or not everything, but many other things in this market, they've had a big run and they're expensive. K2M, that looks like a buyout. Let's see what we see. Quick info from Web. Being bought out. And don't you love it? All the attorneys come out of the woodwork. The stock traded at 22, got bought for 27. I'd be happy if I was a shareholder, I think. It's a big gain, and it's getting bought, 27, 28, it's all-time high. I don't know. I don't understand lawyers sometimes. I'm sure there's a reason besides their fees why they're fighting this. So I don't care about this one. Novacure I do love. This is one of my favorite stocks. They make a device that any normal person, if they had a brain tumor that was serious, like a glioblastoma, would want their treatment. They have sales continue to increase. They've got some great products. It's being tested in other disease states. I've been a long-term holder of them. I believe in their science. It's probably too extended. Put it on your list for dumps when the market dumps. Beat, I used to own this. This was a great time to buy it again when you had a kahuna, a move off of a 50, a Bible gap up, pocket pivot, good earnings per share growth, and all-time highs. Great move. It's extended from here. Lots of beautiful stocks. The problem is lots of extended beautiful stocks and not lots of great gotta buy it right now setups. And that's probably the downside of this market. And then there are a lot of restaurants, which is kind of a defensive play. Maybe that plays into my list that September may be one to remember. Starbucks had a bell toll day. It really went back 6 days worth. With a pocket pivot, everything's green. You know, it's in a downtrend, and I hate buying downtrends, so I just ignore it. Yum Brands has broken out. Lots of pocket pivots. Shake Shack pattern's interesting. 2 kahunas, bunch of pocket pivots, basing here. I don't like the fundamentals. It's an expensive stock. If I was going to buy any of these, I would buy Shake Shack, maybe wait till it closes above the 50-day moving average. So we've looked at the top 10 groups. And I think what I just said a few minutes ago is really the message, which is there's a lot of stocks that look great, but not a lot of stocks that are setting up for buys. So I did come up with my buy watch list. Before I get there, let's go through and review the new summer solstice leaders. So let's go through them very quickly because I bet a lot of these are heavily ordered. And let's see if any of these are buying right now. Lululemon, we already talked about. Amazon, we talked about. Tilray, this is why I put it on there. It's gone from 24 to 66 in IPO. Square actually becomes both a payment processor and Bitcoin play. AMD we mentioned already. Microsoft we mentioned already. That's the Tandem we mentioned already. Intuitive Surgical we mentioned already. Illumina, another this great healthcare technology stock. It's just extended. Carvana's that discretionary consumer I showed you earlier. Beat. Fortinet. Five Below, a retail play. This one is probably the closest to a buy setup of all of them, as it's been basing here at 115. Problem is its earnings are coming out this week. Team, IT technology. Worldwide Wrestling, another one that's probably in the neighborhood of a buy. Just don't love its EPS from it. Now remember, to get in this list, your stocks had to be extended, not necessarily in lower left, upper right. It didn't have to be great buy at this time. Paycom, this is one I like to shoot myself. I got shaken out here. I owned it forever, and I missed 40 points up. Oh, well. Doesn't matter who you are. No one's picked. Haemonetics, this is a life science company. Don't know what they do. Just love the lower left, upper right pattern. Trade Desk, this one pops up every time on earnings. Earnings announced on November 8. NetApp, Network Appliances. I owned this one when it was a lot cheaper. Lower left, upper right-hand corner. Boot Barn, horrible company historically, but look at the stock. Looked at it already. We looked at Chegg already. Encompass Health. I'm in healthcare. I don't know this company. They might own facilities. Looking at what they do. Lower left, upper right. Again, this one might be setting up for a buy as some momentum comes in. Twilio. Callaway Golf stuffed its toes here. Then you had a Bible gap. And pretty much sideways since had a kahuna on Friday. This might be another one that's setting up in a better place. Copart Auto Parts. Nice move up there. Centene, another one that I had and I got out of too early at the 130 range, and it's gone up there 20 points. Healthcare services. And those are the leaders that I picked. Love to hear feedback on this. Easy to create your own list to follow it with me. And then, as I showed you before, you got to love the chart pattern of the index. Don't you wish your portfolio looked like that? We all do. All right, so let me just show you my buy watch list and see if there's anything else there to point out before I go to sleep, because I'm getting tired and it's a 3-day weekend. So I'm not saying that I'd go out and buy Tandem right now, but I do like looking at it, and the way it's going, perhaps it is not unreasonable to be looking at. So I went through, these are the stocks that made my buy list. Let's go through them very quickly. As I've said before, we've seen many of these already. So Tandem, what a great story. When would you want to buy this on a pullback? It's hard to buy a falling knife. It's also hard to buy a rocket. Alta, it's probably buyable right here. This is the midst of great seasonality, and that seasonality period that gives you that 15% return goes through the whole month of September. So still probably some opportunity with Alta. Renewable energy, don't know this stock at all, but a big high type flagpole, pennant, breakout, like the pattern, love the earnings per share growth. Don't know anything about the company, but I'd probably want to research it. Insight, this is a biotech that stubbed its toes. They've got a couple of good products in their market. They've got some big earnings per share growth coming in. They still have a high PE. You're buying it close to the lows. I'm going to watch this one. Blueprint I've already showed you. RealPage, this is one that I bought last week on this breakout and continues to look good. I think I showed it to you last weekend. I showed you PCRX earlier. Run up, sort of a handle. Is this a cup? Handle, breakout, mobile breakout from a squeeze, pocket pivot, kahuna, everything is green. Trucker, here's probably one of the best looking buy me now patterns. We're in a squeeze, pull back to the 50. Earnings are out, and we've had a bunch of pocket pivots and kahunas this week. CVS Corp, Copart, I showed you already, one of my leaders. Chagashu, Biogen, IDAC, everybody's talking biotech. I don't think biotech moves until the Gileads, the Celgenes, the Biogen, IDACs, and the Regenerons move. Here's Biogen, cup, maybe a handle, a bunch of pocket pivots and a kahuna in a squeeze. It's on my watch list, not ready to buy it yet. Viking Therapeutics, this is one of those small biotechs that had a viable gap up here. A couple of them sideways move and running again. Probably worth doing a little research on that. Horizon, I already showed you. I like that. CF Industries, look at these earnings per share growth that came into this stock. If those earnings are met, what do you think the stock's going to do? Think about it. It's got 10 cents this coming quarter and then 37 the next. That's 47 cents. Compare that to minus 39, minus 2. So you go from minus 41 to plus 47. That's an 88-cent move. Probably moves the stock if they hit their numbers. Gerard, I already showed you. Whiting Petroleum, it's not much energy. Here's a stock that was a leader running from 24 up to 50. Sideways move, couple of pocket pivots, sitting on top its moving averages in a squeeze. Great earnings per share growth. This is probably my favorite of the oils. I can never buy this stock. My wife would kill me. But if you want a stock that might behave like a Tandem, here's a stock that's just been in the toilet. American Outdoor Brands. It's a gun manufacturer. I don't buy cigarette stocks because I'm a cancer doc. I don't buy guns. Although I'm not that liberal, I have a hard time, especially with school down here in Florida in the schools. Bible Gap up, closed at the high of the day. Kahuna, mobile breakout. Great earnings per share growth coming in, although this may be the core that just reported. AOBC. Viper, this is another energy stock, but frankly, it looks to me like it's rolling over here. I already talked about Taylor Brands is a retail stock. Earnings are coming out, so I'll pass. But I did like the pullback, sort of the basing and a kahuna coming in. One to watch, perhaps. talked about American Eagle Outfitter already. Wolverine Worldwide, being a Michigan brand, all the way to South beat by Notre Dame, which sucks. Setting up at new highs with a pocket pivot, PSCR breakout, good earnings per share growth. Carbonite, it's near its highs, not a whole lot there that I liked. Express, I showed you this breaking out of its range. Here's that cheap biotech Innovate. Inovia Pharma, long-term downtrend. I've talked about this a couple times when it broke here. This just looks like it wants to go higher. It's a cheap stock. Like most of these biotechs, it doesn't make money, but it does have revenue coming in, so maybe that's changing. And then if you want to buy a food stock that has a good pattern to buy, and I got to tell you, this has got my interest. Sonic, I like the burgers, but more importantly, they had 3 kahunas in a row, pocket pivot, mobile breakout from a squeeze. They make money. It looks to me like this one wants to go higher. It's in a strong group. Don't know anything about Nows Corp, but it showed up on my TradeStation scans as well. Volume is fine. Going sideways with a base for the last month. Pocket pivot, kahuna, mobile breakout from a squeeze. That looks interesting. Sirius XM needs some momentum, a pocket pivot or kahuna to come in, but it's sitting right above the 50. Wild Horse is another energy stock play. I love its fundamentals, but even with these fundamentals, it fell from 29.30 down to 19. Still like WLL better. Then Ares Capital, this one made my screen. One, it's at all-time highs, or at least year highs, pays an 8.7% dividend. And then PAGS, this is another, fallen angel IPO, kahuna, big move, mobile break for squeeze, Bible gap up. I just love the pattern, halfway in that pattern. I wouldn't let it go below the 27 range. So you're going to risk probably about 10% on that trade. But this trade looks to me interesting. GoPro, an old, young name. I just like the sideways pattern. I'm waiting for a kahuna or momentum to come in. It's going into a squeeze. I just stick it on my buy list so I can watch it. PPL is the only utility in my list, almost the same comments as GoPro. So what do? I can't buy all of them. There's a couple here that I'll probably play with on Monday. Horizon Pharmaceuticals is one, maybe CF, maybe Old Dominion, which means I'll set up my buy-sell parameters, position sizing, and put orders in the market. But what I mostly do is, hopefully my TradeStation is not screwed up. Oh, of course it is. Well, never mind. I was going to show you, I've showed you before, my radar screen. Let's see if I can find the radar screen. Here it is. I'll have, try that again. All right. I'll put my buy watch list into a radar screen, and then I will look for various signals to come in during the day and give me an idea that it's time to go in. And these signals, if I can make this move, include John, Q, my own signals from HGSI, pocket pivots, Bible gap ups, mobile breakouts. I look at earnings, etc. And that's what helps trigger me when it's time to get in, because I can't be looking at every chart. Well, on that note, I think it's time to say goodbye. Have a great Labor Day weekend. Be safe. Don't drive drunk. And remember, November, get the dates again, 16th, 17th, 18th in Orange County. Might be 17th, 18th, 19th. I'm waiting for the final dates with George Lee. And then I'm hoping to do a one-day seminar November 28th in Palm Beach immediately before John Person's 3-day meeting. Good night, everybody. Be safe.